Why should Americans understand European inheritance tax laws? Imagine planning your future and realizing that your loved ones might face unexpected taxes when you pass away. That's why understanding European inheritance tax laws is so important for Americans living, working, or retiring in Europe. These laws can significantly impact how your assets are taxed after your death, and if you're not aware, your heirs could face surprises. European countries often tax inheritance differently from the United States. Instead of taxing the entire estate at once, many countries base taxes on the beneficiary's share of the inheritance. The rates and exemptions vary widely depending on the country and your relationship to the deceased. For example, some countries have high exemptions for spouses and children but impose higher rates on distant relatives or non-relatives. It's also important to know that these laws are usually based on where the deceased last lived or where the assets are located. So, if you are a U.S. citizen living in Germany, you might be taxed on assets worldwide, not just those in Germany. Germany taxes each heir individually and can apply taxes to assets in other countries, including the United States. The European Union has rules that often determine which countries' laws govern inheritance, especially for movable and immovable property. But you can choose to specify in your will which country's laws should apply, which can influence how your assets are distributed. Keep in mind, however, that the tax rules of each country still apply, regardless of your choice. Knowing these laws helps you plan better. Without this knowledge, heirs might face higher taxes, especially if exemptions are smaller or rates are higher than in the United States. Some countries have rules called forced heirship, which limit how you can distribute your assets, unlike the flexible estate planning options in the United States. To stay ahead, Americans should consult with international tax advisors and estate planners familiar with both U.S. and European systems. They can help craft a will that considers the laws of the country where your assets are located. It's also wise to evaluate treaty benefits that might reduce double taxation, which occurs when two countries tax the same assets. Understanding European inheritance tax laws is a key part of protecting your wealth and making sure your assets pass smoothly to your loved ones. It helps you avoid surprises and ensures your estate is handled according to your wishes. This knowledge is essential for anyone managing cross-border assets or planning for life in Europe.